All right, everybody. So I'm a little bit rushing to get things set up here. Um, let's see. Anybody here? Chat? Nope. Let's see. All right. Gonna have some echo. Morning. Teach us. How's it going? We got this mic set up. You guys will hear less of the lawnmower sound and more of my voice. And kind of here to narrate this, so that's important. Yeah, I am coming to you live from Kiev, Ukraine. No, we are not um, evacuating quite yet, although we did make a trip to the. You guys can't hear me right now anyway. Okay. Which one should I sacrifice here? I'm going to sacrifice this. All right, I hope you can hear me now. That should be better. I can hear myself. That's good. And I'm going to share my screen. Hey, what's up, Harry? What's up, T-Chess? Let me pull up some slides here. I'm going to share my screen in front of me. Give me 1 second. Okay, so the IPOs that we are looking at today are Credo Group. This is the mainstream IPO that we've been sort of waiting to see if the market feels strong enough to digest an IPO that isn't just some live stream, low float sort of, shady TKLF. We can take a look at that in a little bit. And certainly that was even better than FGI. But as we can see, the market rallied a bit yesterday into the Fed speech and then died off as soon as it went from to Jerome Powell actually talking, which seems to be the trend here. But overnight, we got, I guess, decent earnings from Tesla, which first dropped the share price and then it pulled sort of a Microsoft rally and now has sold off again into the open. But I'm not sure if it was just that or if there were other factors that have contributed to, I think, people sort of digesting that, okay, maybe we're not in the, on the verge of a complete collapse. And people start taking a position back into some of these tech stocks that appear to be beaten down. Maybe it's an overreaction. And with the stability, we see IPOs again. So let's take a look at CRDO, and then we'll take a look at Knightscope, which kind of caught me off guard. It didn't get a lot of coverage. I was aware of it because there's a lot of advertising on the internet about it, and it's kind of an interesting company, but not sure it's going to get a whole lot of play today. So let's go over what we know about Credo technology, since this is really sort of the main event here. And then we should get the pre-debut balancing starting in about 10 minutes. No, sorry, about 4 minutes. But I expect they're going to take a little bit of time here since there are 25 million shares to balance. Credo is a semiconductor manufacturer. They are fabless, which means they don't, press their own silicon. They outsource that part. They do focus on data processing chips. So anytime we're talking about sending large amounts of data through hardwired connections, broadband, Ethernet, fiber optics, the microchips that control the devices that push and receive that data, those are the products that they focus on. And in their prospectus, they really focused on the idea that data is growing and the use of data and the need to process data is growing exponentially. And their technologies are therefore in high demand and will be in high demand going forward, which makes a lot of sense. The revenue was up 45% for the 6 months ending October 31st, 2021. That's a very strong number for any kind of non-software company. Gross profits are up 25% for the 6 months ending October 31st. So they do have very strong growth metrics. They also have negative cash flow, net income, and operating profits. Those are what I often refer to as baseline financials. We've seen a lot of institutional investment money shying away from, especially software companies that have high growth but negative baseline financials. However, this company is moving towards positive territory in their baseline financials. And apparently, there's a lot of institutional interest in this company's IPO. BlackRock committed to buying $120 million worth of IPO stock. And to me, this feels a little bit like Global Foundries, but Global Foundries on a much larger scale. They are an actual fab, meaning they are, kind of producing the materials that then a company like Credo would need to buy. Credo's technology is a little bit more specialized and higher, more advanced than Global Foundries produces. Sort of not as high tech, I guess, cutting edge um, semiconductors. So there is a pretty big difference between the two. But I'm not sure that the retail market will differentiate too much between them, except that Global Foundries is sort of maybe a safer play. Um, this is a little bit more speculative. They do have a really high customer concentration in that four customers account for 73% of their revenue, which means that, okay, well, they add one more big customer, maybe the deal sizes are very substantial enough. They can bring more customers in. That's, it's not too hard for them to scale up, scale up their revenue as long as they can fill capacity. Although at this point in everything we know about supply chain constraints and demand outstripping supply, whether they can scale up to meet that demand is questionable. And if they were to lose one of these big four customers, they could have a pretty adverse reaction on their on their revenue. The float is 25 million shares. So that's kind of below the 30 million share threshold that I consider to be standard, but really 25 to 35 is a pretty standard float. We can't expect a low float kind of pinch or that to really attract people who like to play the low float IPOs, even if BlackRock is eating up 120 million at the current indication, or I think the IPO price was 10. I have to double check that really quickly. Credo Technology prices the IPO at bottom of the range. Okay, so the range was Bloomberg, I hate you. So the range was 10 to 12. They placed it at the bottom of the range at 10. So one of the things I look for, especially if I'm thinking about playing an IPO debut, is I'm looking for what is the market conditions? What is the strength of the company? Here we have a company that clearly has institutional interest. That's a good thing for going live. But especially the market's been really rough in the last month, especially in the last kind of 2 weeks. So we saw a lot of IPOs getting pulled. The fact that they're even doing their IPO is in some ways a strong indicator that the underwriters and market makers felt like, well, by the time this company goes live, things should have, maybe we're at least probably not crashing at this point. They seem to time these pretty well. We saw that in the midst of all this downtrend, TPG Group, which is the only other mainstream IPO to go live this year, TPG Group went live on January 13th, and it was kind of in between the week before, which we saw things get kind of ugly after January 6th, into the first half of the week that they went live. January 10th and 11th weren't great, and then by the 12th, things sort of turned around. The 13th itself wasn't great, but TPG had already sold their IPO shares really the night before, and that was the first IPO that we saw this year that wasn't just some low float kind of rando IPO. And what we saw in TPG Group was priced in the middle of the range, debuted conservatively, left plenty of room for everyone to kind of take a little bit of meat off the bone. TPG Group is now trading at $33.01. It debuted at $31. So it's had a little bit of up and down, but really hasn't gone down. I think the low is still above $30. The low since the debut is $30.12. The high is $35.40. So if you bought the debut at 33, I took 1 point right off that was my first live stream. Some of you joined me for that one. And, went from 33 to 34.99. So could have wrote it a little bit higher. 2 days later, it topped out at 35.40, and it's kind of maintained this range. So IPOs often in a hot market will debut at a huge premium. I mean, last year we were seeing companies like Bumble IPO'd at 36, debuted at something like 74 or 76. And it hung out there for a couple days and then came down, popped a little bit on their first earnings release, and now is way down. So let me bring up the sell side, the IPO crossing. I also sometimes call this the pre-debut indicator, and show you what I'm seeing here. Give me a second. I got a lot of monitors going on. Okay. So for this, we're going to go to share another screen. So we're going to stop this one. We're going to share. Stop screen. We're going to add another one. I'm going to go up to the Webull desktop interface. I'm going to show you what I'm seeing here. Credo indicating 12s, 50 with sell side imbalance. Good. Yeah. Thanks, guys. So what these guys are pointing out here is that we are seeing a sell side imbalance at a price of $12.50, which means that there are currently roughly 500,000 shares being balanced out here, and or orders, I would say. 437 sellers ready to say, or paired shares that are agreeing on selling at $12.50, and then 50,000 sellers saying, hey, I want to sell at $12.50. Can we find 50,000 buyers who are willing to pay $12.50? And if not, they will probably have to bring this down a little bit. And when I see a sell side imbalance sitting here on the debut for a long time, I kind of make a mental note of this number and say, okay, well, if we got 50,000 sellers who paid $10 for this that are wanting to dump it at this price, and that number is now growing without any buyers coming in. So maybe that's the top today. A lot of times the early number that we see, the high that we see in the IPO crossing, ends up being the peak. We'll see a lot of times that these come out at a really high number to kind of gauge. They'll kind of do like a high test and a low test. And when that high test quickly gets abandoned, I kind of make note of that. And oftentimes we see that kind of be the upper limit of where something will run, even in a hot IPO market. This one, it looks like they're going to have to bring it down. So what we're seeing is that they're giving retail is kind of not all that eager to buy into a fresh IPO right now. And the underwriters and the market makers are going to probably need to bring this down a little bit. And in cold markets, we see really good long-term holds, especially if this is sort of the edge of when, the market turns around. If this is right, if the market's getting ready to turn around, I don't really think it is. I think we're still looking out till February or March. But for a long position, if you really like this company, this is kind of a gift opportunity to buy in the IPO at a relatively fair price compared to what institutional investors are trying to buy this at. So Harry is pointing out that yes, Goldman is a bit of a binary underwriter in terms of how they like to take these live. They tend to try to milk every penny on these, and unless the market is really frothy for one of their deals, I tend to see them as less kind of retail friendly as, say, Morgan Stanley, who was the lead on TPG. But that doesn't mean there aren't opportunities here. I probably won't play this. I don't particularly love this one, and I'm kind of heavily invested at this point across across my other positions, and not trying to get stuck in anything more at this point. But if you like, I don't see this as probably getting too much action. It looks like the other thing, I don't think it matters all that much. I don't think we're getting full information in this level 2 data, but it is interesting to see that, there's really, these are the buy side orders, and there is, some interest indicated here down at 11. So people looking to maybe buy in if this drops, not so much above. And that's why we're not seeing. And these are probably just people saying, okay, well, I just want to get in on the debut, or buyers saying, I'm just going above 12. I'm going at 13. So when I see a company debuting an IPO that I believe is getting a lot of interest, we're talking, especially things like Snowflake or Rivian or um, Doximity was a really hot one. Um, Dutch Brothers. If you have this intuition that something's going to be very hot and it's not going to dip off the IPO, it's going to go up as soon as it starts trading, as soon as those opening trades hit, and you don't want to miss that opportunity, then you want to set a limit order right above this indication price. And just to be safe, I'll usually go, to the whole number above this, or even a little bit higher than that. If I just love this company and was like, no, this is definitely going to fly. Everyone wants to buy this. Like, retail is just going to flock to this as soon as it starts trading. I would set a limit order for however many shares I wanted to buy right now. I'd just put in my order, and I would put the price probably at like 13.55. There was a time, and I made a ton of money on Lemonade and CNO, Big C, Snowflake. I mean, playing these debuts has been very lucrative when the market's hot and people are just piling into them. I'm not sure we're going to see that right now. We've seen that on some of the low float IPOs. This one's interesting. I just really am not sure people are trying to pile into the latest IPO, and this is not a name that most retail traders know. I do like that institutional investors are behind this. It'll keep this from really bombing. I don't think it would see sub 10. That would really surprise me. I think a lot of, if that happens, we're not going to see any IPO, like mainstream IPOs, for a while. I think that while Goldman does have a history of dropping these, or kind of like milking every, kind of incrementally pressing these up and not taking them live until they've secured a debut premium for their clients. So their clients being the buyers of the IPO at 10. At the same time, they don't want to have something that just drops and anyone who didn't sell right off the bat gets stuck with a bag right away. So we're still in a pretty tentative market. I think that this is still setting the tone for the IPO market for the next month or two. And underwriters are really trying to, okay, so now we see this moving towards, just 5,000 shares at 12.25. This is actually like starting to look like an interesting IPO debut. It's definitely not a ridiculous premium. I'm talking about a company with, very applicable product. This is not some random startup. Chips and semiconductors have been a little bit pulling back recently. And as we start to see the first contraction of the share imbalance, we start to feel like, okay, this is, once we see this number fall down to like 1,000 shares or a couple hundred shares, we feel like they might be getting close. But a lot of times what we see with the higher floats, this being not a low float, certainly over 20 million is no longer, not anywhere close to like super low float. We saw IPO's debut with as little as 1.5 million shares recently, and that was our HOUR, and that one pretty much ran simply because it was super low float. My guess is that they get this to contract down a little bit, and then they start trying to raise this a little bit. I think they want to go live closer to 13, but in this market, that might not be possible. There's no time limit on this. They just go live when they, kind of when they feel like they've done the best they can, and they've reached, either they've come out with an ideal target. I believe that that's what happened with TPG Group. We had, they priced the IPO at 31. and then, or sorry, 29.50, and I think they said we're not going above 33. It really looked like that because, see, okay, they raised it a little bit. Now the sell side. I mean, when you see sell side this whole time, it really just feels like they're trying to push it up, and they're not. I mean, what this means is people who bought the IPO are trying to sell. A lot of them, 30,000 more than there are buyers. So 30,000 shares that buyers have not said no, that I'm willing to pay 12.50 for. 30,000 shares are ready to be sold at 12.50. So when I see something that doesn't show the buy side imbalance at all for this whole time, I have no reason to want to buy the debut. It's kind of one of those rules that's been beaten into me through experience, is that no matter how much I like the price or the stock or the company, or I feel like people should like this, when we see, it's as simple as red meaning stop and green meaning go. When I see a sell side imbalance the whole time, I'm not trying to buy the debut. So 10 million shares offered down from 20. Yeah. So Harry giving me the, I should get a second guest on this. We can't have multiple presenters, so maybe in the future we'll have guests joining me here. Looks like we got about 24 people on the on the stream here, so thanks for showing up. I did send out the newsletter on Tuesday with a new format, which is a little bit more in depth. I'd say a lot more in depth. And we'll be moving towards a kind of subscription-based model in the near future, partly because I'm now to the point where the number of subscribers has surpassed the threshold for what MailChimp lets me do for free. So I'm sending this out on my own dime at this point, but we'll get to that in the future. And right now, while we are in sort of a slow IPO period, I don't think trying to move towards a premium model will make a lot of sense. And there's not so much work involved when we only have 1 or 2 IPOs on the calendar. So how many of you, or is anybody interested in this Knightscope KSCP IPO that sort of snuck up on us a little bit? Because I did a little bit of quick research on that one. I have been seeing their ads on YouTube, and I know that they've been getting a lot of, or soliciting a lot of, kind of smaller, typically retail investors, which in some ways makes me feel like, why aren't they able to get more institutional money? On the other hand, it's only 4 million share float, and it's an interesting company. They do like Robocops, literally. It doesn't look like what they envisioned in the 80s movies, but looks more like a droid, a big Star Wars droid, R2 type, and basically cameras and sensors to capture movement or scan license plate numbers, things like that. So I think we got a little while. Why don't we take 5 minutes and look at the at what Knightscope is. So I will try to stop that screen, bring myself back up. Rig job, yeah. Okay, KCSP, share. Okay, I couldn't even find an S1 for Credo or for Knightscope on the SEC site, so it's a little bit of a different IPO. The revenue in 2020 was 3.3 million, and from what I saw, it's been in the first 6 months of 2021 was 1.8 million. So we're only seeing 10% growth from 2019 to 2020. They do a lot of advertising on YouTube, or not for their products, but for the investment opportunity. They have a selling agent rather than an underwriter, which was Start Engine Primary, which I have not ever seen before. The float is rather low, and I assume that everybody who bought the pre-IPO shares is under a lockup. So there's just not a lot of, I can't say that there's a ton of excitement here. There is it sounds kind of cool, and I think if they had done it through, say, Think Equity or EF Hutton or one of these other sort of not mainstream or not big big name underwriters. A year ago, the low float would have captured a lot of interest. We saw even companies like MITQ and VRAR and a few others that weren't stealth IPOs, like not the Chinese weird ones that flew, but still did really well simply on the basis of being low float. This one just digital offering as a lead. Yeah. Okay, digital offering. I looked up it just a minute ago. If I see, I'll still have it open. Anyway, I guess the bigger point is it's not an underwriter that seems to specialize in these low float IPOs, and it wasn't a typical underwriter. So I don't know what to say about this offering with Knightscope. I'm more interested in just seeing how it does. I was well aware of it because of all the advertising on YouTube. I think other people were as well. But I think anyone who was really excited about the opportunity probably already, went in and bought some. So here I am on their SEC page. And as of today, see annual reports. Man, we have 1As, we have 1Ss. It's not normal stuff. It should be just an S1. So I looked at some of these and just look for underwriter and okay, digital offering is an underwriter. Okay, within the meaning of blah blah blah. No, okay, so digital offering. I've not heard of this company before. It's not an underwriter that I have any kind of history to compare how their IPOs go. We like to go to these websites and check out what their latest deals are, because sometimes you can recognize the IPO transactions. All right, let's see what else they've done. Fat Brands, that has done some up and down running. If you followed that, it's had some odd sort of squeeze. Acorns, blah, 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 Thoughtful Media Group, don't remember that. Email, I don't recall any of these except for Fat Brands. And that one has done some weird things. NASDAQ Fat, we can bring up the SPY seems to have given up some of its gains from earlier, up now just 1%. Had around, just bounced off 437. Some other positions that had rallied a little bit. Here's kind of what I'm watching. Don't really mean to show that. Let's take a look at this. All right, Palantir, thanks. What are we looking at right now? We're looking at Fat. Okay, Fat Brands has gone. All right. Gone on quite a ride here. It originally IPO'd in, oh no, we're not going to get that far back. So Fat Brands went on quite a big run here from the pandemic to, I don't remember the story here, but got a lot of, these are kind of momentum hype squeeze plays. The float's only 4.48 million shares, so that explains some of this. It got targeted as a low floater, and I think had some headlines and steadily grew up. It's done pretty well, I guess, since since that dip into the pandemic, and even compared to before that. So, but they don't have much of a track record for me to base anything off of, so I can't get excited about them in terms of being either scammy in a fun IPO way, or all that exciting in terms of a track record. So I really don't know what to say about this one other than I will watch it and see what it does. But the other thing I might look at is, does Twitter seem to have any interest in this? KSCP. You can buy this. Okay, invested through the Seed Invest. So is this on Seed Invest? This was on a few others. My IPO. Got Algos. Got will I lose half? Will I lose it all? Is this a real company? All right. So a lot of people seem like they bought it. Let's see how bad my shares get slaughtered. All right. Well, even the people who bought the pre-IPO shares. Okay. Goes public this morning, so it thinks will be a dud. Some people are long. No IPO. Good luck, buddy. Sounds to me like the people watching for this one are the people who bought the pre-debut. But share price go up, share price go down. Criminal terrorists. I know, warning people about IPO coming to market. No profits in a product that will not. Okay, so that's not particularly encouraging either. You don't see people pumping this. You don't see people getting too excited about it. That makes me say, at $10, there's a lot of room for downside. I'm, not going to jump into this with both feet forward. This is one to watch. So let's go back to CRDO because I'm going to say Knightscope is maybe going to go live first, but we won't know until 11 o'clock when it starts pricing, and we could be in for a little bit of a longer wait here with CRDO. So let's go to let's go back here. Okay. All right, so here we go. They have pushed up. I guess they paired enough shares. Now we're up to 495 at 13 to say, well, we're going to keep it here, and if wait for the sellers to fall off or the buyers to come meet us up here at 13. I'm not sure they're going to get it much further than this, but you never know. As has been pointed out in the chat here, Goldman tends not to like to budge down at all if they don't have to. So my feeling is that they would rather take less volume and get the share, get the opening price that they want. We see more and more. The imbalance has actually grown, so they've brought the price up. The imbalance has grown, but so has the they are pairing more shares. So they've paired 500,000 shares here. That's not a huge. That's a pretty small debut opening trade. At and there we go. All of a sudden we have a buy side imbalance. Quite understand how that swing works. I see a whole bunch of a whole bunch of sellers took their shares off. Or, the paired shares just went from 500 to 437. So I guess they brought in a bunch of people to say, yeah, we will sell, buy. I'm not quite sure how that works. But we do see it must have been a bunch of sellers said, yeah, never mind. We'll just hold. And now we see the paired shares dropped, and now we have a buy side imbalance of 70,000 shares at 13. And this is really the first point at which we've seen a buy side imbalance maintained in this IPO crossing. So bit of an interesting look for us here. But got to quickly do something on my other screen here for a second. Okay. Yeah, and IPO trading is something that takes a bit of patience. It's not something that, with the low float ones, we might see pre-debut crossing that is 10 minutes. They always give them at least 10 minutes, it looks like, to pair things up. But with low float IPOs, we often see them go live within 10 to 15 minutes of the initial pricing. We get the pricing times pretty reliably off of Benzinga Pro, and this one was scheduled for 10:10. It started pricing rate at 10:10, but when they say that shares are going to start opening for trading at 10:20, that's almost never accurate with, especially with standard IPOs. With standard IPOs, we usually see these take hours, so get comfortable. You know, if you need to take a bathroom break, that's usually right before it starts trading live, as we've all found out. So try to prepare yourself for it's a little bit like a road trip. But we are now at 13 on CRDO. At 11 o'clock, we should see KSCP start balancing. I'm not clear. I imagine that the lockup period must be, and I can get some data real quick off my phone, that there must be quite a bit of shares that are locked up here. So I don't have the information out shares outstanding. If somebody wants to look that up real quick and share it with the group, that'd be appreciated. But yeah, this wasn't very well publicized in terms of, they did a lot of publicity on, you can buy pre-IPO shares of KSCP, Knightscope, but the actual IPO itself didn't really hit my radar till this morning, and I've been looking out for these things, so I was a little bit surprised. And that to me indicates that there won't be a whole lot of retail demand for this. CRDO, and this is not a lot of volatility in the IPO crossing. A lot of times, especially when we had higher demand and a little bit more interest from retail traders wanting to buy IPOs off the debut, this number is bouncing around a lot more. Instead, we kind of see the imbalance shifting a little bit, but really it looks to me like the underwriters are just like, we want to get 13. We want to give our IPO buyers, this 30% premium. We're not too interested in coming down from there, and we can wait until the buyers show up, or sellers say, not at this price. But if you're an IPO flipper, if you're someone who got shares of the IPO and you're okay with 30% immediate win is not a bad trade, but like I mentioned before, there's a incentive for, not for the company. They already sold their shares. Credo doesn't care. They already got their $10 per share. They're probably a little bit disappointed because their range was 10 to 12. I kind of tend to try to look into that a little bit, maybe more than it has any real meaning, other than you must have really needed money to go live in this debut. Is that a sign of weakness in the company, or did they have assurances from companies like BlackRock who said, who made a commitment saying, no, we just want you to go live? Okay, now they tried to jump it to 13.25. They got a sell side imbalance, and that is, due to the, when I see them bring the price up and trigger a sell side imbalance, and they wait, and then the sell side imbalance, catches up. Especially when I see the number of paired shares dropping, it starts to feel like more and more like I don't see this going way up. Definitely not way up. It might go up a little bit, but it feels like, Goldman is sort of given the instruction that no, we're going to get everything that we can get on the way up, even if it's lower volume. We're going to get that and give our, whoever's trying to sell this, roughly 500,000 shares off the debut, give them their premium. And then, after that, it's not really their problem. They may try to protect it down at a certain level, let's say 11. And if you are a day trader and want to try to pick that level, certainly $10 at the IPO price seems like a logical basement entry. But in this market, I really don't know. We see the SPY is slipping, other stocks are slipping. This morning's gains are being given up, and we're not seeing the kind of red that we saw on Monday and Tuesday, but we are Not seeing, not seeing the run into Fed announcements we saw on Wednesday. So, don't really like the setup here. 1302. So they brought it back down. They kind of pulled it up. Once we see this 1302, once we see this, yes, it is an IPO. Answering some questions in the chat. Seems good to buy. If you're long and you want to take a long position on this, this is a more fair entry than other IPOs that we saw a year ago, probably, where all the IPO debuts were like 50, 70 percent above their IPO price, and the IPO allocation holders were just happy as pigs in mud and flipping right away, and still seeing debuts that just ran up 10, 20% or more for a day or two. This one, if you like this if you like this long, maybe start a position here. You're probably getting a reasonable price, but in this market, do you see a whole bunch of retail buyers like piling into this to say, yeah, I just want to load up on this today, this is hot, this is going to be the next biggest thing? I don't know about that. Certainly there are traders who love the IPO. There's a lot of volatility. The catalyst is built in. That's what I've always loved about IPO trading. But I'm not sure that, when I see the sell side imbalance the whole time, given this market, it's not, there's been so many where I was just so certain that we'd get an upside movement off the debut, that in contrast, this does not feel to me like I just can't miss this. This feels like, let's see what it does. And if you like semiconductors, then maybe this is it. If you like this company, this might be a good place to start. If it drops a little bit today, maybe get in. But remember, the initial pricing was $10 to $12. That was the initial range. So they priced it down at 10 to give the IPO buyers an opportunity to get some premium here. But we are seeing almost every IPO price above range as recently as like 2-3 months ago. So to have, in a better market, they might have put the range at 10 to 12 and then actually done the IPO at 13 and still been able to bring it to market at like 15 or 16 or even higher. So to get this at 13, maybe it's a relatively reasonable price. Here we are back at 13, this time with a buy side imbalance. And okay, you're asking when can I buy CRDO? You'll be able to buy it as soon as it starts going live. If you're wanting to buy this the second that it debuts, you can set in a trade on your trading account right now. And what you need to do is just go to your trading account, put in CRDO, enter a limit order. That's the type of trade, the type of buy. Put in how many shares you want to buy and put the price at like 14. So it'll fill your order as soon as it starts trading at whatever the opening price is, provided that opening price is below 14. You can put in 20, and it'll still fill it at 13, for example, if it goes live at 13. To me, it feels like this one's going at 1301. If I was just to guess right now, I mean, my guess before was 13. They seem to tack on a cent or two here and there, which means nothing for traders. But when you're talking about 500 or 600,000 shares, I guess it's enough to make it worth their while to add that little incremental cent or few. Here we go, 1305 with 1,000 shares. So this is starting to look like it could go live at any time once we start seeing, but really we'll usually start seeing, say, 100 shares imbalance, 5 shares, 200, start flipping at like really small numbers on this side. When you see that happen the first time, maybe it's a fake out. When you see it happen the second time, you start getting excited. After that, it really could go live at any time. So you can buy it when they've balanced out all the sellers and all the buyers, and there's no set time for that. But you could set your order now, and I'm sure if you set it at like 1405, I would be pretty shocked if they were able to raise the price, the debut price above. I don't think they're going to go much above 13. I don't think they're going to go above 14. So if you put it in at 14, just above 14, maybe to be safe, your order will be triggered the second that it goes live.
And that's great if you think it's going to go up right off the debut. It also means, if it does drop, you are going to be stuck in that. Yeah, I think that it dips just because we've seen the sell side imbalance showing far more than the buy side imbalance. And that goes down to when it first started showing at 1225, 1250. When I see that, I don't really feel like there's there's no reason to believe it's just going to rip up. So one strategy, if you think, especially if you like this and you don't want to get left out, there's a ladder strategy, which is to set limit orders, say at 1305 to make sure you get something, 1275, 1250, 1225. So you set kind of like a staggered list of orders. And I recommend doing that, kind of increasing the volume of your, say you want to buy 1,000 shares. Start with say 100, then maybe 200 at the first increment down, another 200, and then say 250, and then in other words, increase on the way down. That way you're averaging down, and reducing your cost basis. You're getting lower as you go, but you're doing it with kind of like, okay, well, the lower it goes, the bigger position I'm willing to take, which is sort of your own sort of supply demand metric, where your demand should increase as prices, as prices decrease. So here we are, 1302. It looks to me like this is kind of like this 13 and a couple cents is where they're going to find their sweet spot. Another approach is to try to undercut the debut. Sometimes we see these just sell off immediately, and then all the sellers are gone, and then there's room for it to come up. It's kind of a risky trade. I've done it before, but it doesn't. I mean, it's a tough one, because you're basically saying, look, I don't really believe in this enough that I think it's going to rip right off the debut. But I do want to get into it and think that I can cheat a little bit by, trying to get in at like 12, maybe, or sorry, like 1205 or something. So you look at these buy orders here and you say, well, there's 25,000 shares rate at kind of 12 and 1209. I want to get in under those. Maybe I think it goes live and just, bombs for 1 sec, quick sell off. We saw a lot of sell side imbalance, and then the buyers start coming in, and the IPO flippers have already gotten out. And then, from there, it just steadily recovers, or quickly kind of bounce down, bounce up. But it's a bit of a tricky play that, like I said, I don't love it, because basically you're admitting that you don't have super high conviction in it, and you're willing to jump in if it dips and recovers. So you're basically betting on the dip and recovery. Otherwise, you can just wait and see if it drops, read the RSI, wait for that to come back up above 30, look at the volume, watch the volume move, and then, basically you're day trading at that point, which I'm not a great day trader. So I tend to stick to the IPO debuts that I really like in markets that are, hot, and those seem to be the plays that have worked best for me. This one is taking its time. See, they had it paired down to 1,000 shares, and then now it's imbalanced at 168,000. So, like I said before, you kind of gotta these don't get rushed. They'll rush the low float ones. They'll get those out the door. There's not as many shares to pair, and if they could just kind of tell a little bit earlier on whether the demand is high or demand is low. If the demand is low, they're probably not going to want to let it demand disappear completely, so they'll get it out the door. If the demand's super high, they want to take advantage of that too, get it out the door. The low float ones that just sort of are right at IPO price, haven't seen. Usually there's at least some kind of premium that indicates which way it's going to go. When you see a low float IPO, a good example was our price the IPO at 4. they tested 550, then 5, then 450, and it went live at 450. Did a little, I think it went up, halt, down, down, up, halt, and then ran from there. I don't expect halts out of CRDO given the volume and generally the range that we've seen. I mean, we've seen pre-debut crossings that are, with wild swings. I mean, those of you who traded Sweet Green, for example, that priced the IPO, I believe, at 28, 20, 26 or 28. And then they started, the pre-IPO pricing, the crossing at, I think it was like 30, then it went to 40, then it went to 45, to 50, to 54. And it was just swinging all, it was just up. It was a huge range from, in a dramatic premium. And they ended up taking it live at 51 something, which didn't give it much room to go up. It went up like for a split second or a minute or two to like 54 and then just started coming off. I mean, that's one of the dangers of, it's kind of a double-edged sword. The debut premium indicates demand, and when you see a good, strong pre-debut premium, those are the ones that we have seen run. If you don't see anything, you're more likely going to get a drip than a dip than a run. But here we see kind of a conservative, and it's different. Market conditions are going to give us different debuts. But this, now we're up 30, over 30% from the 30% debut premium is pretty strong. But we've seen sell side imbalance like for most of this time. So a dip off the open is not out of the question. And if I were trying to catch this, like I said, I'd be looking at this, this support right here. We'll see better support lines once it actually starts trading. If you wanted to try to catch a dip entry or undercut the debut, that's what I'd be looking for. I'd be trying to say, well, maybe I'm laddering in at like 12, just above these guys, so maybe like 1270. Here they go. They're trying to get 1350 out of it. This is, as Harry mentioned, Goldman doesn't like to leave anything on the table. They want to, every scrap of meat should be clean off the bone before they take this live. I think they almost take it personally when they've left room for it to go up. But we see, okay, 1340. Once we see this action start to move a little bit more, and they've moved off like the, going 1350. Now we're kind of in that 13 to 1350 range, and they're looking for, once we start seeing crooked numbers on the end of the indication price, then we know that we're starting to get close. Once we start seeing small numbers in the imbalance, 7,000 still, we're not there yet. We'll start seeing, triple digits in a second here, or not in a second here, but before we go live, we'll be really down to the nubbins here. And once it goes live, we'll switch over to the other window. We'll get better candles over there. But still a few minutes away from Knightscope. We are expecting that to start pricing at 11 o'clock Eastern. And Credo has been taking its time. Now, with mainstream IPOs, the stock exchanges have flat out said we like to space them about an hour apart at least. So on days where we have two mainstream IPOs, when we'll see both of them indicating at the same time, generally we expect that whichever one gets closer, and I haven't worked it out entirely, but usually the smaller ones go first because there's less shares to pair. And then we'll usually have a break about an hour between them. It would kind of surprise me if they did anything special in consideration for Knightscope. These really could go live at nearly the same time, and we have seen that before. All right. Harry pointed out that Global Foundries is down 235, Intel's down 335. Yeah, semis have been, like, the last week or two have not been particularly strong. So, but I mean, strong compared to what? Maybe they've been, going down, but so is when everything else is going down, tech related, and they are going down a little bit, and everything else is down a lot. I'm not sure we can make too much inference from that. But they haven't really held their own either. So um, we see it here. Credo, they're trying to push it. They want to get 14. 13, if I was really excited about this, 1305, something like that would have been my target entry. And at this point, I would be saying this starts feeling like I don't really know who's going to be rushing in to buy it anyway. So I'm going to take a little peek at Twitter just to see if other people are interested in this. All right. You guys, I'm on Twitter at Warrior IPO. Some of you DM'd me during this chat, which is cool. Live stream reviews. Yeah, if you guys can subscribe to the channel, like it, anything, it helps. I'm trying to build this up still. I appreciate where this has come from, and those of you who have been with me for, the ride, I really appreciate what this all started with a Reddit post. I'd done a few trades on IPOs and shared it with people, and got a lot of questions, and instead of just trying to answer them one by one, set up the IPO Warriors Reddit thread, which is r_IPO Warriors, and or backslash, I guess I should say. And you can sign up for the newsletter at ipowarriors.com. That goes out every weekend, once to recap the week's IPO trades and once to preview the IPO trades of the week ahead. And IPO is not just for trading the IPOs. This really gives you an opportunity to learn about companies the day that they debut. And since we're starting before they debut, you're really getting ahead of the curve here. You're understanding what are the financials of a company, what are the markets that it's in, who are its competitors, what kind of growth is it looking at, what are its products, where does this fit into the marketplace, and it's just a really good way to build up your mental index of all the companies that are being traded. These do have a lot of volatility when they open up, and there have been tremendous opportunities, not just in the initial IPO debut, but on swing trades when they drop. Sympathy plays when companies that are in the same industry go on runs. Trend plays. I mean, Roblox was just sitting there waiting to blow up for a long time, and it went from the IPO price of 64 ultimately to a high of about 140 with the recent metaverse kind of references and media attention that the metaverse got off of the Facebook name change and to Meta. And that was the time to sell. I had a big position in Roblox that worked out really well that I had bought on the direct listing IPO. I guess I don't know what you call it. I guess it's an IPO. It's the initial public offering. Direct listings are a little bit different, but IPOs are a great place to to start your education on a company, especially if you really like the company. It might be a good time to take a starter position. I think it's probably a good time also to get out of a position before the lockup period, which is 180 days later. And okay, so here we see Knightscope. Let me just finish that thought, because no, buying the IPO debut is not a great time in most cases to start a long position. To me, I find the exception to that being direct listings. I think those are more fairly priced for retail traders, and certain stocks that are just really hot. I find IPOs to be buying the debut to be really 1 to 2 day trades in my book, which is what I like about them. I'm in and out. I don't have to watch the market every day when I'm trading IPOs. I'm hoping to take profits within minutes. I mean, I've made tons of money sometimes in just especially on those low floaters. A halt, you sit through the halt, and you get a couple halts, and then within 30 or 4 minutes you're out, and you've made a significant gain. This one is showing some strength. So KSCP, a little bit stronger than I might have expected. As you can see, we have a much lower volume of shares. Some of this is going to be that you have a lot of retail traders who got allocations who might not even know how to sell out right away. Now things are coming down. I can't get too excited about this one. I don't know how many people are really excited about the whole Robocop concept. It sounds futuristic and is in many ways. In other ways, people are, I think, a little bit turned off by it. It's definitely about surveillance. It's definitely about more cameras, circulating and watching us. And these really are used more in private, at least what I understand. It used more on shopping malls, parking lots, hospitals, just kind of taking the job of, or enhancing the job of a security guard. And they seem to be effective. I looked at some of the reports that they had, although we're talking about pretty small sample sizes. One of them was the Huntington Beach Police Department, and it's kind of like, monthly arrests down. They say, 20%, but then you look at the numbers, like from 43 to 36. Like, well, maybe crime is down. I don't know if that's an anomaly or really can be attributed to, these cyber police or whatever, robo police. But it does make sense. I imagine a future where we have autonomous robots cruising around, keeping an eye on things, and this company seems to be in the lead. The CEO is a former Ford executive who saw the opportunities in autonomous driving. Apparently, got somewhat, I guess, was inspired by after 9/11 to do something about it and form this company. And it's futuristic, but not sure how much excitement this is going to draw. I don't see a ton of buy orders up here. And again, it is a low float. Low float is unpredictable. I do believe that Twitter will tell you a lot of times when you've seen ones that run. Twitter has forecasted them pretty clearly by people being excited about them. When people are not excited about them, I'm not talking a ton. You don't need hundreds. Just even a few people saying, "Oh, this is, don't miss this one. Get in on this one." These seem to run. This one, I don't know. Okay, now we're back up to, and this is just such a good example of Goldman kind of slowly, and we have this variance indicator showing how how it's been sort of pulled up here. We have things, we started around 1225, I think it was, like slowly. They're just milking it, and each time they try to bring it up to 1350, 1375, the sell side gets heavier, and they bring it back down. And as I said before, I think they get to 1305, somewhere in there. That's about where I'd feel safe maybe trying to play this. I don't want to because of I'm just not too excited about this IPO. I do think it's probably a good entry point. If they go at 1305. If you're trying to trade this, though, you give yourself more upside opportunity if you can get it below this, below 13. And in this market just feels like my conviction isn't as high as I'd like it to be to make this kind of trade. So I have to trust my gut. At some point, I have my mental game plans even when I'm not playing them. And at 13, just over 13, that's, I think, a starter position, being able to average down if you see this drop off. That's another kind of, okay, so here we are. When we start seeing that 31, we saw that just spot there for a second, 31 shares. Now we're back up to 185. Some more people climbing in. Now we're starting to see numbers that look more normal for kind of an opening trade. We can drop back here. Okay, well, I might be wrong on this one. When we do see a low float IPO start to put up, a decent premium, there could be a run here. We've seen nothing but buy side imbalance. We haven't seen much of a sell side. So, when we're talking about momentum plays, day traders don't have a whole lot to. If they don't have other things to trade right now, low float kind of like attracts the trading crews, and it's been a fun trade in the past. And if people are looking for something to play, these are the kind of plays people can get attracted to. So I'm going to try and see if anybody is talking about this. Switching over to Twitter here. Knightscope, 4 million share IPO priced at 4. That's not right. Finally going to move my to a real brokerage. 1465. All right, well, now we're starting to get into, I don't know if it's dangerous or about to go on a run, but it's kind of interesting now. There's a time when I would have said, okay, well, low float with this kind of debut premium means people are interested in buying it. At 15, you don't see a ton of sell. It wasn't just like everybody's dumping. Could this run? Yeah, we've seen these run. But in this market, I just the downside when it's up 50% is pretty tremendous. If I had gotten shares at 10 and I did not really like this company, I'd be pretty tempted to take my 45 or 46.5%, 50% and bail. Then again, we see nobody selling. Look at those sell orders. There's like nobody trying to get rid of their shares here. That leaves a lot of room for upside if people start jumping in. Oh, man. I mean, not in position to go take a bath on this one, but this kind of setup is not giving you a lot of reason to think that people are dumping. And if nobody's dumping and people want to day trade this, it doesn't take much for this to go up into a halt. We're talking about less than 40,000 shares being traded on the opening debut. Nobody really adding to their, the sell orders aren't going way up. This is kind of a weird looking one. Yeah, you might be, we saw this with AERC. Let me just check back real quick. So I think they're going to let this marinate for a little bit. So we're going to focus on this one. This one go live probably pretty soon. All right, some of the sellers are starting to say, okay, I'll take that. But if we saw this fall back down to 12, it's an interesting debut trade. When we see this, like, this number's not moving much, which kind of says, all right, there are about 40,000 people wanting to sell at whatever price that they can get. Okay, this is one thing I want to point out. We saw it touch 17. There's almost no sellers over here. So 17 might be, where I'd, make a little note of my book here and say, well, that would be, if I got in at 13 and could get out at 17, that's a great little trade. When there's not a lot of sellers over here, how can it go? I mean, there's no shares available to short on IPOs usually for a couple days. So, this is sort of primed for, if it does halt up and nobody's selling, it'll show up on all the halt lists. We got one guy or girl, one shareholder, kind of holding down the fort up here. But otherwise, there's not a lot of liquidity on the sell side. And that's, it's super low float. And these, sometimes we saw AERC, which had 1.5 million shares, I think, debuted the day before Thanksgiving. And it just ripped. Nobody was selling. And it went, it was a $10 IPO, priced at 40, or debuted at 40, and went up to 100. So when we see some of these odd setups, in a less risk off period in my trading, this might be something that appealed to me. We've got sellers up here saying, okay, well, I'll put my sell orders in up. Some people woke up here, but anytime we see when I see the ask side start to disappear, this is going to go live soon. Did it go live? 1444 KSCP. We got to bring in this. Hold on. Okay, now I got to switch over here. This is the 1 minute chart, and we see. Okay, it did not get that halt on the open. Instead, it looks like we're getting. We got a halt. We got a halt down. All right, so that's what happens. Halts on low, opening halts on and low float IPO debuts go hand in hand. We saw 78,000 shares traded in the opening minute. It kind of made a fake out move to the top there. It's almost impossible to catch that if you're trading. If you have a platform that lets you put in that stop loss and take profit on the debut, great. E-Trade, even the Pro desk doesn't let me do that on the IPO debuts when I haven't been allocated the shares yet, which kind of makes it tricky. I mean, you had a split second to try to get in an order. Sometimes I'll have the order all ready to click once to enter, click once to confirm, and try to catch those. But this was, this got sold off given the debut premium. Now, some people will say, well, try to catch the rebound. And there are trading desks, I believe Net Zero, which I pretty much need to sign up for an account just to catch the opening halt price. But we don't get that here with this trading desk. So unfortunately, I can't give you much guidance as to which way this is going to go. If you bought that debut, that was obviously a risky play, and now you're sitting in a halt that is upside down. These halts can go either way. I have made very bad decisions and made some very good decisions on these. To get out on the actual opening of the halt, what you need to do is set that limit order now. And if you're wanting to say, well, if it gets, if it opens up above 14, which doesn't look like, this looks like there's more buyers down here, but not a lot of people willing to sell either. So can't place an order on Webull. Yeah, I think that they kind of messed up this IPO. We saw this happen before, like with SIDU, where SIDU, where trading desks didn't have it. Sometimes these lesser known IPOs, for whatever reason, change their schedule or decide to go live without really a lot of warning, and then the trading desks don't have the ticker registered. And when I see that, I really don't want to play them. Since I wasn't trading this, I wasn't trying to place any orders. But if you see that there are trading desks that don't offer the ticker, that can be a sign that there might not be as much demand as there could be. We do have to consider just basic supply demand dynamics here. And if there's demand is constrained because trading desks don't even have the ticker, then without demand, the supply is going to be stronger than demand, and that's not good for the price action. So what we see here is buyers kind of down at 13 and 12, and no significant walls up here. We don't see a lot of sellers either, though. So I don't know which way this is going to go. TD Canada can't order either. I'm guessing that TD Ameritrade doesn't have it. And that's just been kind of a disaster for these. I don't really understand, other than the stealth IPO, which I've talked about in length elsewhere, where they're intentionally not wanting retail traders to come in and play it. Those are generally Chinese kind of garbage companies that are manipulating the float to run up the price, my hypothesis is that's for money laundering purposes, and therefore they don't really want kids like us crashing the party. And those are a very different setup than what we're looking at here. For these, this is a company that's advertising all over YouTube. It's nothing. They're not trying to fly under the radar here. Why they would schedule their IPO when no one's really aware of it, and the trading desks aren't even set up properly to offer the liquidity, the buy side liquidity, or buy side demand. I just don't get it. But we've seen it before, and in this case, I guess if you got allocations and you flipped it right away, you took a really nice profit. That's 40-something%. What was it? The opening was 1440 or 44% premium rate on the debut. Okay, well, we just got the Halt of Death. Looks like it halted down again. This is where the Halt of Death is just any halt that opens below the previous halt and doesn't give you any chance to breathe. You're stuck in this again. And this is where if you bought that debut, selling with a limit order right out of the next one protects some of your downside. And now you are looking at, now you're down to 11, 12 and hoping for some kind of rebound at some point. But feels to me like the panic button is going to be pressed by quite a few shareholders, and this one did not do well, and kind of surprised it even had that much demand to begin with. And yeah, one thing people can look out for now is we've only had 125,000 shares traded. That's not a lot, really. We've seen like HOUR had a float of 1.5 million shares and traded 50 million shares in day one as it ran from an open of 450 to a high over 10. So this has halted twice on 78,000 shares and 24,000 shares. So we haven't really seen a lot of volume. That means on one hand, there's a lot of sellers that could still be dumping. But it's not it's highly likely that at some point these halts, we get a halt back up the other way. I think this is not my forte. Day trading, scalping, this kind of movement is not something that I have a great beat on. And if you have the, if we get one of these desks that shows you where the, kind of the balance is on the halt, you can make a better decision on where you might want to jump in on something like this. But my guess is that until we get below 10, we're going to have people kind of panic selling. And that is another indicator, is until we see this RSI line kind of make its way back towards 30, as long as it's kind of pinned down here, basically at 0, meaning that it's way oversold, I believe it still could be, this doesn't give us much room to go any further down. But until we see that come back, we can't really expect any kind of reversal the other way. And at $10 or $11, there's still, this could go to 5. Whereas some of the $4 and $5 IPOs tend not to drop below 3 on day one, so you can try to catch a rebound there. But that was a pretty disastrous debut. If you tried to play the debut trade, that was a very risky play and not one that I recommended. But certainly not one that I played. So let's check back on CRDO. Still no orders for KSCP. So can't turn around if no one can buy it, right? Definitely not worth trying to risk the entry when you have no one else playing along with you. You're gonna be the only shopper in Walmart. So this is not the time, in my opinion, to try a bounce trade on this. I still think that it's until it's not a party. it's not a party of one person or whatever. It's not gonna. I don't even know who can anybody put any orders in.
I don't see him.
Okay, can't have a rally without buyers. That's sort of the rule. I just don't see the buy orders lining up. I see a lot of sellers trying to get out. So if buyers started trying to pile in, got filled at the open at 12:35. What was your limit order set at? Because it looks like it debuted. It didn't even. Oh, on the open after the halt. Right, that opened at 12:35 after the halt. Okay, E-Trade TD is accepting now. Okay, Bob, if your limit order was below, say, 13 on the debut, it would not have gotten filled until it dropped below that at when it opened up out of the halt at 12:35. If you put in your order after that first halt, and it was above, and see, we're just gapping down. This is a sell-off. This is one of the worst. Okay, if we don't get a downward halt, no, I wouldn't touch this. It's just without all the trade desks working. I think other people have given up on it, but yeah, it's. I mean, I can't time the bottom here, and I wouldn't touch it until we see some kind of reversal here. But I don't think this is a company that people really are too excited about. So I'm gonna step off it for a sec and watch. Just check in there. Okay, so we're looking at Credo. We're just going to focus on Credo on this screen, and we can just flip back and forth. CRDO. Credo. Oh, 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 oh. Oh, I don't want to get a DCRM license. I can't. No one wants to hear me sing anyway. Okay. We are up to 700,000 shares. Still seeing a heavy. Every time they boost this to get the sell side imbalance, buy side imbalance. The SPY has moved kind of back. It's up 1% today. So the market's not keeling over and dying on itself today. That's a good thing. But this is just, halt, halt, halt. The 3 halt rule is something that I use on to kind of govern my trading on IPO debuts that go up through 3 halts, and by the 3rd halt, I will sell everything out by that point. I like to sell at least a piece out of each halt. If it reverses down, that means at least you kind of balance some of your position out into profitability on the way up. I can't remember the last time we saw 3 halts downward. This is ugly. I think everybody that wanted to buy pretty much bought on that debut. Some people, I guess Bob and a couple others have bought here. But when you see something open up and just start moving down, I think it's kind of dangerous to try to catch this knife. Now at 970, maybe now you have the allocations are saying, people who bought in at 10, less enthusiastic about selling right now. But you don't see a lot of buyers here either. So maybe this settles down. I would kind of be looking for a baseline before you start maybe trying to pick a bounce. But anybody who bought it at 10 at this point is probably, maybe they get one. No one's really had a chance to think about their trades. This traded for less than a second. This traded for a couple seconds. This was 2 seconds, 3 seconds. Nobody sat there and said, well, now I'm going to think about it, submit, think, my order, do I want to confirm it or not? There's no time for that kind of thinking. People here are just like, nope, I said I would sell at 10. They sold at 10. People said I'm selling on the debut. They sold the debut, and then, had a half a second to think, wow, okay, no run, sell. This one, people had already made up their minds. There might have been some algo trades that traders that picked up, but I think the majority of the trades were at the open. Buyers saying I'll buy just off the tape, off the open of the halt. Sellers saying I want to sell on the the open of the halt. So those are all like limit orders. Even that little nub upwards, that little candle wick, probably all controlled by limit orders. Maybe a few. I don't know how you could be that fast. That was a blinked and all of a sudden it showed up. So we haven't seen, this is traded for 3 minutes, but realistically, what, less than a minute of actual like tradable seconds in which you could place an order. So we don't really know what this is going to do until it stabilizes a little bit. Again, this is super dangerous to try to touch at really any price. Until I see a baseline RSI start to come up, I wouldn't even venture to make much of a guess on it. All right. You can see how long do these last. These tend to be so this one was this was a 5-minute halt. This is a 5-minute halt. Okay, so the halt was at 12:24. It's 11:24. It's 11:28. So in 1 minute, we expect this to kind of be 5-minute halt zone. Some of these are 20-minute halts. Some of them are 30-minute halts. Tends to be how, and there are people who know better than I do what those are based on. Some combination of volume and divergence from from the price. So these have not been. I mean, that's just from 13 to 12:35. That's not a huge gap. This was down at 11:12 to 10:85. Not a huge divergence. When we see huge gaps, it tends to be longer halts. But this one should come out in a minute here, and it looks like it already did. And I'm just not picking it up. Oh, there we go. Still down. Okay. If you are trying to find a place to enter, I would not suggest you pull that trigger quite yet. We do not have a lot of demand all the way down to 575. Sometimes it's the underwriter protecting a base at some point. We see that less on the low float IPOs. This is when I see the buyers just sort of dry up and disappear. We got sellers. This is a fire sale. There's basically nobody who wants this, and I cannot pick a reversal on this. So checking back in real quick, still quite a ways to go from CRDO. They've kind of given up, it looks like, on the 13 level, so you're getting a pretty fair price here. Not relative. I mean, the range had been $10 to $12, so and they're still not able to get that. So they're gonna have to bring this down even further. Probably a little bit of a disappointing IPO in terms of what the company and underwriters were hoping for. When you've got a range of 10 to 12, price, and you're basically having to take the low end of that range, that means institutional investors weren't particularly confident in spending 12, and now you're bringing it live, and retail's kind of shrugging this off as well. Just don't think there's a lot of people wanting to add to the position in in any new company. It'd have to be something particularly remarkable to get people's attention. So we finally have what looks kind of like, oh, you can't play this. We've had our first kind of consecutive minute in trading here without a halt. And this doesn't look like too many people want to sell for lower than, I guess, $7. But if it starts climbing up, you're going to have people starting to want to continue to run for the exits, since there's just nobody wanting to buy this. This one kind of could get, if this gets low enough, some trading group will, like Zach Morris's, one of those trading groups might say, okay, well, so here's somebody at $7 starting to say, well, I might be able to buy up some of the free float here and pump this on a day two. But that's the first significant. Yeah. So when I see these kind of paired support walls, this to me has that look of something that might be starting to kind of level out a little bit. And if you are trying to swing this now, would be kind of the time to maybe take an entry. Don't buy in heavily. You can start a position. I'm not trying to do that. But we've seen these kind of down here at 7. There's people who are going to like expect a run back to 10. And if the trading desks are open, day traders would find this. And when I see these two kind of like twin sentinels of walls here, that's where that reversal off 7 could be a run back up to 10. I wouldn't ride it all the way back up to 10 because everyone will be looking at that. You got the $9 sell limit here. Certainly a bunch of people trying to sell out at 10 here. Volume on this has not been high. I tend to kind of earmark the halfway point when we have a float. They're not showing it here, but the float on this was 4 million shares. When we start to get to 2 million shares, if we do see some kind of run, that's where I start to actually kind of think, well, now we might have peaked. Here is the movement off of RSI 0. It hasn't broken 30. By the time it does eventually break 30, it'll probably already be uptrending. But these walls now have been brought down. They're not trying to protect 7. And these aren't huge walls. They are accumulating shares. What we've seen in the past on debuts, low float debuts that didn't soar, they started what appeared to me to be accumulation down at a price below the IPO, where they can start kind of building a position. There's just not that much being. There's still a lot being sold off. There's not a lot being bought up yet. And getting a 2-point run off of this, from 7 to 9 is a nice little win. But until the sellers really dry up, we're not going to see a reversal here. So, bit of panic selling. We've got the first level. Tend to think that there's a level and another level below it. Not always the case. If you're trying to day trade, scalp this 7, 680 to 7 seems like it's getting some support there, but an IPO that just debuted at 10, how many people want to bag a 30% loss right away? I think you're going to see the sellers start to dry up a little bit, and they'll start to take a little bit of mercy. Some people just say, "Oh, screw it, I'm out." This was last time I buy some YouTube hyped IPO. We're still a ways from CRDO going live. CRDO is showing an imbalance of still 42,000 shares. We've been hanging out at this sort of like 700, 680 on the paired to 700. The price has come down a bit. So remember, we saw this go up as high as 1350, 1375. For a IPO debut trade, that's, I'd be looking at it. You could look to take $1 on this. We've seen them sort of have to pull it back down to a buy side imbalance. I said 13 was kind of my upper end target before. So 12 to 13, I would be surprised if it crashed below 11. I believe they will try to protect the IPO investors at 11. And this is, 12 was the upper end of the range. It was 10 to 12 was the IPO range. They priced it at 10. And, the lower risk than a lot of the IPOs we saw that debuted at ridiculous premiums in early 2021 and certainly in 2020. So check back in, because this is where the action is. We are starting to see this kind of baseline. We still don't have RSI 30, but we have to assume that the panic sellers are kind of gone, and now we are either in, the sellers have become the day traders who are either bag holding these off these drops, day traders who picked up around here and are gonna, maybe have their price targets at 9 or 10. Is this, we're not going to have the dead cat bounce of shorts covering, because this is an IPO. There's no shares available generally for shorting. So at some point, especially if the day traders, sellers, maybe if you got stuck in the halts, if you bought those, you're the bag holding contingency, and we did see you know, a bit of volume up there. So the minted date, the minted bag holders, but still, are they going to sell at a, you know, a 50% loss right here? Or I think a lot of people who are holding are going to hold out for, you know, an exit in the 9 to 10 range. If you, you know, so if you got in at under 7, there's a pretty good chance you can pick off, you know, a $2 run. I'd be setting my, if we do get any kind of breakout, trailing stop loss, probably a good idea. And if we're still getting not tradable on some of the popular day trading apps, you know, the volume just isn't going to fill in. And I think a lot of people are probably, it's a good time to check into Twitter and just see what are people saying. Probably train wreck. Okay, let's see. Hold up. You know my opinion on this name. So the Idiot Brigade lose their money first, cut themselves. IPO Dave, love this guy. He is sort of the legend in this IPO trading field on Twitter. He said, you know my opinion on this name. So let the Idiot Brigade lose their money first, and they have managed to cut themselves in half within an hour. Great job, kids. All right. Yeah, we're starting to see this reversal right now. I don't know what drives it, but we're about to see a jump to 8. There's that jump to 8. And yeah, as I said, 9 is sort of the, you know, the target that I would, had I got in an under 7 or 7, I start to feel like a lot of people waiting to hit that eject button once you touch 9. So even at 8, got people taking that dollar win. 7 to 8, that's a, you know, over 10%, 15% win right there. But it does look like until you get back closer to 9, the sellers are not wanting to, the sellers who didn't panic sell on the way down are not wanting to, you know, are the ones who are diamond handing, as they like to say. Who else? Robocop Ipo failed. Yes, it did. That's Nola Momo, like her, him, not sure. But scam company commercials for CNBC for years. Basically, I think when everybody knows about it and wasn't excited about it enough to buy the pre-IPO, not too happy. Halted for, yeah. Volatility. Finally went public. Wonder how long it take for it to become a penny stock. Seeing website not advertising. Private sale for at least a handful of years. Blah blah blah. Yeah, just getting dogged. You know, when something gets dogged like that on Twitter before the IPO, it's kind of turns people off. So here we are hitting that RSI 30 mark. This is where a turnaround could happen or could not, but at least we are not, you know, we are now entering the point at which it could run into an overbought zone. But we're seeing a large spread here, and whoever's got these 1,000 shares that are trying to get rid of, they if they start seeing this start to sink, they may try to panic. You know, they may panic and bring their sell down. Okay, we got buyers kind of starting to nibble a little bit, but still not a lot of momentum. When volume starts to die, this does not look good. Not much of a chart reader, to be honest, but this did not get didn't get a lot of momentum into this rebound, kind of failing off. The hopeful bag holders may be losing hope, may come down, may baseline a little bit in the $7 to $8 range for a while. I tend to think that low float IPOs get their jump at some point, but when you have this high debut premium, it's not always guaranteed. A lot of times, if you add that extra, that first candle, that's a kind of missing candle, is the $10 to 1444. And if you looked at that chart where you had, from 10 to, if we get a drawing out here, if you see, basically 10, oh, no, thanks. Well, doesn't want me to make a trend line there. Sorry, guys. Getting used to the tools here. Drawings, hide all drawings, trend line. How do I reset? Delete all. Okay. All right, we get a trend line from, say, here. It's not helpful. There we go. Okay. We get something from 10 to 15. What am I doing? Sorry, guys. Screw this, huh? I think you understand my point. My point is, if you saw a chart that looked like that straight up over here, now we're getting, I have to reset that. If you saw that first candle's missing, so it doesn't, when you see, if you trade penny stocks, you trade low float stocks that are running on momentum like that, and you see that initial spike, trying to catch that bottom is something that is a dangerous game. If you're a really good chart reader, maybe you pick it off, but I am not. And to me, that might have lower downside at this point than it did before, but there is absolutely no guarantee that it does any kind of recovery. So I am not going to touch this. I have asked MC Hammer to let me play Can't Touch This, but I have gotten no response, and I'm not holding my breath. Okay. KSCP. So it's kind of like it. RSI 30 didn't make a strong crossing, bounced off at once. Holding it here means it's oversold, but there's not a lot of interest in this. And once volume disappears on a fresh IPO, it is not a pretty outcome. So let's go halvesies. Halvesies. And this. Okay. So Credo. I guess this app is not as friendly. Doesn't like to share. All right, Credo getting closer. We still see nothing but sell side imbalance, so I see no reason to get excited about playing an opening debut on CRDO. It's simply resistible. Try to fit all this on one screen. Again, if you're looking for a day trade on one of these, ask yourself, why are you so compelled to make a trade out of something? Just because you've been watching it, you really believe in it, nothing else to trade. Trading out of boredom doesn't usually turn out well for me. But trade your own trade. I certainly can't give great day trading advice. Would not advise you to buy this at that price. So buying these halts, definitely didn't say anything about doing that. $7 felt like the safest entry point we've seen so far. But again, you're playing with fire. And I don't think anybody loves this stock. I think people who invested early are either they got a lot of suckers to get excited about the idea of being able to buy private into a private company before it IPO'd. Having watched a couple of these before, I forget what the other one was, but I don't think it's a great look to be advertising the private company shares on YouTube commercials. Just doesn't seem to indicate a lot of strength in a company. And when they are spending their ad budget on that kind of thing, who's in the club that you're sitting in, and When it comes to IPO allocations, if you're getting a big allocation and you're not like a big financial guy or girl with a lot of money, you have to ask yourself what company are you in? And as Gaucho Marx said, I don't want to be a part of a club that would want me as a member. That kind of goes for the IPO trading. When it's a really, really strong, hot, like IPO with a lot of institutional support, a lot of retail demand, you're probably not going to get any shares. Even if you have a couple $100,000 in your trading account, E-Trade never gave me anything good. I asked for allocations on on so many IPOs and just got nothing. And then when I did get an allocation, it was for DD and DNUT. DD was a horrible train wreck, and DD or DNUT actually went up, but I was kind of, first of all, they weren't big allocations; they were like $1,000 or something. And with DNUT, the allocation, they say if you sell within the first 30 days, we're not going to give you shares in the future. And you're kind of like, oh, well, I don't want to screw up my chances of getting like a good IPO in the future, which is silly because they're never going to give you a good IPO. And didn't sell on day one anyway. So it's kind of one of those damned if you do, damned if you get an allocation. And if it's a good one, you're not going to get it anyway. So yeah, let's look at CRDO. Still kind of in that 1250 to 1350 range. They're not in any rush to take this live. I guess the paired shares has gone up, but they've had to bring the price down to get there. No indication that this is going to go live anytime soon. We are now about an hour and 40 minutes into the process. There is no time limit. There is no starting time. It's just when they feel like they've gotten the price that they want and paired all the shares at that price, they will take it live. Who is they? I'm not even entirely sure, but it feels like it's the underwriters, the market makers, and to some extent, those of us trying to trade the debut are kind of, this is where things start to get interesting. We're just kind of adding and removing our shares. So, okay, this is getting interesting. They are raising the price, getting the side imbalance. The paired shares is going up, but so is the imbalance shares. So every time they get kind of close, they seem to say, oh, okay, let's try to get a little bit more. Okay, we're, wait. And they get a sell side imbalance. And then they start kind of like, okay, so you guys want 1250 now? And I just imagine this being a room where, the underwriter and the market maker are sitting there going, let's go get some more here. Let's try to get a little bit more. Oh, no, they don't want it. Okay, bring it down a little bit. Bring it down. Okay, we got some more. Let's bring it up a little bit more. And I'd love to sit in on or understand this a little bit better. And I'm doing the research. I'm making some contacts and getting some answers to these, that'll come up soon. Carson, you're the second person to ask this. When can we buy CRDO? You can put your order in right now. Just go into your trading desk, enter in CRDO, put in a limit order, tell them how many shares you want to buy, and put your limit order at like 1350. Your order will get filled at the debut price no matter what it is, as long as it's below 1350. So if they end up taking this live at 1265, your order will get filled at 1265 the second that it starts trading. If you are below this indication price, say you put it at 12, you're not going to get filled unless the price drops on the open below 12, which might happen. But we do see a lot of demand up here. I mean, these are pretty big numbers up above 1250. This don't necessarily mean anything. I would look at these numbers more for support. But we're talking about a much different animal with CRDO than KSCP. Knightscope has only traded 590,000 shares of a 4 million share float. That is not the kind of volume I like to see on a low float IPO, unless it's like a stealth IPO or something that's been clearly manipulated. This is just not a very popular stock right now. We've seen the ones that really ran trade at, within the first half an hour, they've traded the entire float. This is not, I don't think this will hit, I don't see this hitting 4 million shares today unless, it starts ripping to the upside, which would take a trading group or some kind of pumper to, if he's able, or if someone's able to accumulate a bunch of shares and then run it. We often see that on day 2, but they'll just let this kind of drop out. This could finish the day at like 6. If it does make any kind of run, I have a hard time imagining that it breaks VWAP. I have a hard time imagining that it touches VWAP. I just don't think that there's enough excitement, kind of organic excitement about the product itself. It wasn't publicized very well. People have been having trouble with with even accessing this on their trading account. So unless something happens to push this into an upward, halt, which could happen at any time, I don't really have any inclination to touch this. We are seeing Credo continue to pull down. They are not getting the kind of excitement that they're probably hoping. They are getting more shares, like higher volume. Ready to take it off. Busted deal. 3 months. I tend to look at the what we're trying to refer to as the QPX, the quiet period expiration date. They can come out with with a low float IPO that, this is especially true with some of the biotechs. Once the quiet period lockup expires, the analysts will come in and give it a price target. The company can do press releases. So if they have, let's say they sign a big order, and I don't think they were allowed to announce anything right before the IPO, but certainly for the next 40 days, if they were able to attract a big order and they can't say anything about it, they could come out on QPX and say, on the date of that their quiet period expires and say, hey, we just signed an order for 1 million units. And we would see something with this low of a float just, take off. So, I don't know if it takes 3 months, but I think that this is, I agree that it's a busted deal. It's not something I would want to get involved in. And with volume falling off like that, without demand, there's not going to be any kind of run. All right, we are seeing CRDO continue to kind of sit at a pretty low debut premium. So this is the lowest we've seen it so far, and that is they're not actually being honest with this. This started down at like 12.25 or 12.50, so I don't know why they're not showing us the whole thing. But all right, KSCP, let's pull off of that for a minute. Someone asked about HAPP because I was talking about it yesterday as one of these kind of garbagey, complete garbage, direct offerings that we saw. So HAPP, MYNZ. Okay, we'll catch up in the chat here a little bit. Okay, HAPP. This is complete garbage. I've really no idea what they particularly do. Something with e-commerce, or I don't know. Doesn't matter. What put them on my radar at first was, so they sell nutritional supplements in China, blah, blah, blah. Chinese medicine, okay. Spore powder, mushroom stuff, donkey hide gelatin, vitamins, American ginseng. So I lived in China for 10 years, and that stuff's really popular, and they sell it for obscene amounts of money. That really doesn't matter. The point is that we saw TKLF do their stealth IPO last Tuesday, right after the holiday, and it absolutely, if you bought IPO shares at $4. It debuted at 43 or something, and it was pretty volatile. It dropped down to like 20, came back to 30, fell off, dropped to 13, then rebounded to 37, hung out at 30 for the next day or two with a little bit of swinging, and then just fell off a cliff. And it made a few kind of spikes, but now it's at 285. If you want to see the daily on this, so zoom in here. Okay, so this is TKLF. All right, it debuted at, well, it was really like 43. Dropped down to 13 on day one, came back, closed at 32. A pretty ridiculous movement. Day two, it swung between a high of 32 and a low of 22. Kind of hung out in this range, and then on day five, dropped from an open of 28 and a high of 30 down to 450. Made some after hours runs up to 650. The next day, it ran from like 5 to 650 and then fell off. Keeps falling off. And these low float stealth IPOs, there's no rhyme or reason really behind this. This company has now a market cap of 102 million. They claimed revenue of 221 million in 2021. So, I mean, it has a market cap that's half of its annual revenue. Weird. And, the only thing I could say was, well, it was only a $4 IPO. So why it ever touched 43? That's a whole nother scam story that correlates to what we've seen in some of the, the underwriters that handle these seem to be the same ones. Bosted Securities has done a lot of these. Network One Financial has done a bunch of these. Univest, which is the company that did this one, they've done a bunch of these, and some of them have given us an opportunity to get in at like 10 to 15 and then ripped up to 40 through halts. CPOP, TIRX, EJH. There's been a few of them, but I made some insane wins. TIRX debuted at like 16, went up into a halt at 17, opened under the halt at 50. I had 1,000 shares. I made 33 grand in like 3-hour halt. So I had to sit through that. But when it debuted, I made 33 grand in a day of trading on, 17 grand. So that was one of my best trades ever. So they're worth watching. You can't buy them up here when they do this. It's like JZXN did that. I forget what the other one, SNDG was the other one. So you can't really mess with those. And we'll just quickly bounce back to make sure we don't miss this. Okay, CRDO is just not going anywhere. We gotta wait. We got some time, folks. Oh no, they're bringing it down. I don't want to miss the debut. So the point about HAP is that it's the same underwriter as TKLF. The underwriter that did HAP's IPO is the same underwriter that did TKLF. They're also the ones that did, this is Univest, they also did PLIN. And PILN, we spotted the offering here. And we said, this looks shady. Well, let's buy in. And a bunch of us got in here. And once it started, I think I got out at the I got in off on this candle, I think. But it doubled. I mean, from 140 to over $3, and then they fall off. You don't marry these stocks. You are playing them on a gimmick. On the idea that this is some kind of gimmick going on here. And the other one, the one that we really nailed was Pets. Okay, Pets went from where we spotted it was here. Okay, it was trading at $1.94, and they did a direct offering at basically like with the warrants, it was like a 30 cents per share if you factored in the warrants, and the price just dropped. So we said, wait a minute, this is Bosted Securities is doing this deal. It makes no sense that Pets would do this. I mean, why would you sell, if your stock's trading at $1.94, why would you sell shares for like 30 cents? unless something was up. Did a little bit of quick research, saw that the insiders, the float at that time was something like, I don't know, 11 million shares, but insiders owned 82% of it. So it was really only like 3 million shares trading. So I took a position here and just waited and waited and waited and waited. And it went up a little. And I thought, no, that's not it. Waited, 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 waited. And then bang. It went actually on this day right here. It dropped to $1 on a second direct listing. I bought more. And then in after hours, it ran up to 8. Came back down, opened the next day at 4, and then topped out here at 940. And took some position here, took some out here. Kind of was like watching, held on a little bit too long to some of my position, and then on January 10th, it just sold off, shorted everything. Now it's worth nothing. So again, don't marry these things, but HAPP, what it did, missed CRDO. Okay, we'll jump onto CRDO. I don't know if anybody is actually playing that, so. All right, and we are down. Down and trading with the spread. Not a lot of volume. 1 million shares, all right, respectable, but not a lot of movement here. If you got in on the open at 12.10, you didn't get much of a chance to do anything with it. Now you're down a little bit, but I wouldn't panic yet. We haven't seen, this isn't going to do the same kind of movement as KSCP. There's simply more liquidity, and we haven't really seen what this is going to do yet. This is where if you undercut the bid, you got in at a better price than if you had bought the open. If you laddered down, let's say you took 12, 12.7, 12, 11.80, 11.60, 11.40. You haven't taken your full position yet. I don't love what I'm seeing right now because this market just isn't too hot. And if we didn't see a pop right away, given that we saw that heavy sell side imbalance on the entire, almost the entire duration of the pre-debut crossing, we had to expect a heavier sell-off at the beginning. We do see a baseline here because this is a mainstream IPO and Goldman is involved. We do know that underwriters will kind of protect a few price points on the way down. They don't want to see their IPOs crash on the debut. It's not a good look for them. It's not a good headline. And, they do want to kind of mitigate the damage here. I guess we're hearing some people saying it opened at 12.10. These numbers aren't always 100% accurate on the backtracking. I've had orders fill higher than the actual open price, which shouldn't happen. But yeah, opened at 12.10, down at 11.50. This one's probably a bit safer to try to play some kind of rebound move if we see it get oversold. I wouldn't be really ready if you waited to see what this was going to do. I wouldn't be really trying to do that. Maybe you can start a position at like 11.05 if you want to get in there. But these walls, sometimes they act as support, but often they act as magnets and pull things downward. It looks like someone's trying to make sure they don't get left out off a rebound here. So, you don't know if these are real. People can spoof these as well, or put in trades and pull them. But until we see down, if you're looking for kind of an opportunity to get in at an optimal price, I see kind of buying is thin here. We still are above the IPO price, so IPO flippers still can get out with a profit and maybe kind of setting their their stop losses to protect what is currently a win from becoming a loss. We're going to stay on this for a minute here and see what we get. This gives us a better reading of the chart. We can come back to HAP in a little bit, but essentially with HAP, I'm saying, all right, well, shady underwriter, shady company did a direct offering at 80 cents a share when the share price was at 50 cents when they did the offering. So they did the offering here. It was at about 50 cents and just dropped. And so when I saw it down here, it was a little tied up. When I saw 40 cents, I thought, well, somebody just made a big investment, made a big investment at 80 cents a share. They don't want to get delisted. They're under $1. Uh, would they reverse split to save the share price? Would they do they have some tricks up their sleeve to get it back up to $1? Whoever bought it, and I mean, the way these tend to work is not to take not to give shares out and then force those shares to take a loss, give them an opportunity to take an upside. So I see it as from 40. Did they just? I mean, it's a $10 million direct listing. Are they trying to just take a bath, give their friend? Direct listing is not publicly. It's not like they did a public offering. They gave it to somebody that they wanted to have hold the shares. And with Pets and Plin, those turned out to be like follow the kind of hypothesis I have that if you're money laundering, you give somebody else the shares, drive up the price, with your account to prices that other people don't want, maybe get some momentum, and that direct offering, whoever got that direct offering, is now selling their shares, and you're transferring your money from maybe inside China to outside, outside of China. If you're wealthy in China with a ton of money and sitting in an account, you want to get it out of China. This is one way you can do it. You can give your cousin or your uncle or yourself with another external account and just trade the shares from buy the shares for way more than they're worth, and move that money into your account outside of China through each transaction. So what I see in HAP is not a whole lot of downside from here. And maybe I take a 25% loss. I didn't take a huge position, but my guess is that they're going to find a way to get it back up to 80, if not above that. And I don't know where that target exit would be. They've run it before up to 250. In the past, it's even been as high as $6 from the IPO. So I'm willing to take that risk from here to maybe $2. So it's just an idea. Don't go betting something meaningful on this. It's nothing about the company, nothing about financials, nothing about catalysts, other than they did a direct offering, and it looks to me like they're not trying to let it fall below 41. Yesterday it was 39.40. Take a swim at your own risk. It's pawn scum, garbage, bullcrap, Chinese, stealth IPO alternative, and that's how it should be played. Looking back over at CRDO, we are not getting all that much support. Still haven't hit down at 11. If we break through 11 and you like this company, that's maybe, starting to look at like when you might want to buy in. Bigger implications for this are that IPOs are not going to get a lot of, nobody who's considering an IPO right now is going to go, oh yeah, no, now's definitely the time to go in. They're going to look at this and go, this is, TPG Group was such a solid company with so much industry backing that I think they kind of had confidence to go into do their IPO, and that was before what we saw at the end of last week and early this week. CRDO, that was a pretty brave move or desperate move for them to go live here. We are now, in the middle of what their range was. Their range was 10 to 12, and the IPO buyers are sitting here going, well, I probably got Goldman probably went to them and said, hey guys, we're going to do this IPO, and if you want to get in when things are good, now's your time to kind of back our deals. And if you don't back us now, don't be surprised if your cupboard is bare when we get the bigger ones, like when you've got companies like Stripe coming up. Hopefully, we got Plaid. We've got some other deals on the calendar for this year that are likely to go through to Goldman, and they're that they tend to kind of reward the institutional investors who back them on their less sexy deals with with bigger allocations on their clear winners. So they all know that that's the game. They all accept it, and Goldman hasn't delivered a complete stinker here. But this is not the kind of deal that's going to get people super excited. And we see this sort of $11 floor approaching. This also has not traded. I mean, I guess it started oversold, but whereas we can pull off HAP and go back to KSCP, Knightscope. Knightscope is trying to kind of like baseline. It's got this sort of like foot look to it, which yeah, we see reversals off this sometimes, but I think people will be scared of, a lot of day traders will go kind of test test the test to see what Twitter's talking about, and if everybody's dogging it, nobody's talking about it at all, then it's just not going to be much demand. Look at these volume candles are just bleh. You can't get excited about a couple thousand shares, and I think at some point people say, I give up and sell and sell and sell, and this looks a lot like Vine. Vine eventually dropped out to about 5, I think, and then finally got ripped back up to 8, 9. But I've heard some different theories about why. That it was got kind of tied to another deal and said, yeah, if I want on this one, you've got to like take a position in Vine, and that's why it popped. There were certainly trading groups that had been talking about it right from the initial, saying, hey, when this dies, let's start accumulating shares, and then they might have been in on it. So I still think this is too much downside to 4 or 5 that I'd want to try to play this on the potential for a low float pump, and just not enough shares have been bought up. This is really low volume for an IPO, a low float IPO, and certainly not what the ones that have run look like. That's nothing. Okay, coming back over here, CRDO, also not a lot of volume. We're looking at 30,000 shares a minute, 30, 40 volume expect. I mean, you're going to see you're always going to see the bigger volume right here at the beginning. We haven't seen any green volume, one tiny turnaround off the first touch of 7. Everything else, this is not a good market for IPO debut buying. Possibly take a longer look at something like CRDO. Let's see how it does off the 11 floor. It still hasn't touched that sell wall or that buy wall down there. And at some point, I kind of would expect CRDO to turn around. It's just not. I don't think a lot of people trying to play this this game right now. I think we've got where day traders trading. If we look over at Benzinga, they're trading INDO, NSEC. Those are the INDO. Let's just check that real quick, because that is the biggest gainer on the chart today.
Indonesia Energy Corp. Interesting. Up 76%.
And why? Okay. So we saw this. We didn't see it, but okay. It started out at $3.24 and ran up to $9 on resumption of drilling, 2 back-to-back new. So they announced a new drill deal, probably popped overnight. No, not much. Just kind of like people woke up today and said, all right, well, 1.57 million float. That's a tiny float, and that's a pretty big deal, I guess, or something sounds noteworthy. They're drilling more oil. That's where day traders are playing today. Nice ride up there. I really don't try to day trade. Not good at it. This one, if you caught that headline, That's pretty nice. And you made that correlation to the free float. That's a nice, it's a nice opportunity though. You set up a stop loss for HAP. Uh, yeah, Indo is probably over. I don't tend to, something I really should learn from. I will set a stop loss if we get a run up. At this point, I don't know, it's not money. I bought what, $1,000 worth. Is it going to go to zero? I don't think so. If I lose $1,000, okay, well, lost $100,000 on a trade before, so not trying to repeat that, but didn't take enough risk in that trade to set myself up for that. I want to put this real quick. No, my play on HAP is just let it ride. If there's some shenanigans going on, it may take a month before or longer. At some point, I think we saw it could go to 30, 35, but somebody has an incentive to keep it at, someone has an incentive to keep HAP happy. Sorry. I'm a dad. I get to make those jokes. Someone has an incentive to get that back up to 80. Whoever just bought $10 million worth of it at 80 cents a share has, the belief that is going to go to 80 cents. I can't get my mind around any kind of scenario where, whereas with buying, paradoxically, buying it below, below the price, I understand why the stealth IPOs would do that. The stealth IPOs would sell would buy a direct offering way below the share price because that lines up with the idea, well, I'm giving you all these shares so that we can, there's a really small freely tradable float because insiders are controlling the majority of the free float, and now we can pump the price up and move money like I was describing. But with a, when you're giving, especially when it's one of these super shady deals, why would you give somebody 10 million for however many shares it was, 8 million shares at twice the share price? You go buy the share price. I don't know. And paradoxically, that's the kind of setup that with these sketchy underwriters tends to work out. So we've had, I forget what was the other one that we tried to play? There's another one that we tried to play that did have a, didn't ever give us a really big rip, but we all were kind of like scalping it. That's another thing we see is we'll see these sort of, if we look at HAP, we see these sometimes go through this, almost like timed bounces where they kind of all, whoever's in on this has said, okay, but that's not enough volume to really call it. Where it looks like they just say, okay, we're going to just, and we don't see enough volume. They're not doing anything with it yet. They're just sort of like, that's a big sell off right there, from 34 down to forward at 38. Doesn't mean anything really. Where we'll see them sort of rip these from, they'll say, okay, the baseline's 40, the top line's 50. We're just going to like let it kind of settle out, and then we're going to spike it up to 50 cents. And that's where all the insiders kind of like sell off again. And then they let it fall off, and then spike it again. And I'm blanking on the name. There was one that we did spot that looked like these other two. My dad's calling me. And those are the, I didn't have to take a loss on that because I bought on the bottom. I scalped it a few times. So if this starts just kind of like popping to 50 and then falling off and popping to 50 and falling off, they might just be playing these 10-cent runs. It doesn't make sense to me with an 80-cent direct offering though. So when I see an 80-cent direct offering on something like this, I think they're going to get it back up there, or they're just like throwing away money. I don't see why someone would move $10 million into a Chinese company. They're trying to move their money out of it. But maybe I got it backwards. But I don't see a point in taking a stop loss on this. The downside is minimal. Recently it traded at, up at like the 55 to 60 level. So I believe they get it back up there. And The upside to me is they've done really crazy things with this. The float isn't super low, and the insiders are not holding a big piece of it, unfortunately. I would like that setup better, but it does look like, smells fishy. Give me my rod and reel, and I will throw my line out into the river. So we're not seeing a lot of volatility either way here, guys. We are now at about 12:30. The SPY, meanwhile, has fallen back to 435. The market is not looking strong. Maybe J Powell started talking again. Not seeing anything on my watch list up that I own, which is not a great look. So that's no fun. We can watch this things a little bit longer here. I think the viewership is starting to trail off as well. We start talking about garbage Chinese stocks, and maybe people get disinterested. But let's give this till 12:30. Let's give this 7 more minutes and see if we get any more action here. CRDO really just kind of bending over with the market here. Reversals, possible if the market turns around. No real support till the $10 level. Good time to buy in if you really like this. Robin bought more IINN. Yes, I have been adding IINN as well. That one is just, to me, buy it and hold it till the next headline. I will probably add more if it gets below the 220 level. I've added warrants, and warrants just don't seem to be moving much anymore. I think 1,830 IINNW shares have moved today. So that's just, I think, kind of reached the point where the holders are holding, and there's a pretty big spread, and not a lot of sellers on the warrants. Yeah, IINN, that's one that took a huge win on earlier, piled up a pretty big position before their first distribution deal was reported. That deal sent the share price up from $2.25 the day before, up over $9, and I was able to bag a pretty nice win on that one. And I like that's basically, it was pretty much a QPX play, where it was a couple weeks after the quiet period expired, but low float IPO, interesting company, came out with some headlines, and just shot the float through the roof. Shorts got squeezed in combination with a low float, and was just kind of the play of the day that day. And when you can catch those, it feels really good. And you want to watch out for those, but they take time and patience, and I am long that company, and I'm again built up a pretty big position and not afraid to add more of it. I'll shave off other positions to build up that position. I believe that by the end of this year, they're hoping to get FDA approval on their first device. End of 2023, they should have full approval on their second device. They have more cash than market cap right now. And, being a buyout, it seems to me like they'd be a buyout target. Definitely like that company. I like their board. I like the advisors they have. I like that they're signing distribution deals. I like their website, which maybe sounds silly, but companies with crappy websites, more often than not, that's actually a decent indication. All right, $11 is giving a little bit of support here on CRDO. Not a ton, but not a ton of volume. Got 258 shares. That doesn't mean anything. Pretty sleepy IPOs. I'm guessing that we're not going to see a lot of excitement in the IPO market until for one, the market needs to settle down a little bit. We're still seeing kind of a lot of volatility across the board. So we need to see that chill out a little bit. Some of it's the Fed not giving kind of they keep kind of leaving people guessing, and that's what I'm hearing anyway. So until that settles down, IPOs aren't going to feel all that confident in going live, and we're not going to see anything, really exciting for a little while. I'll check out the calendar before the weekend. Sign up for the newsletter if you haven't already, and I'll hang out here for 2 more minutes, and then I'm going to say goodbye and consider what to do with what's going on in the rest of the market. Yeah, IINN, man, not a lot of volume these days. So that it's holding up where it is. It's, I think, pretty expensive to borrow to short. So we're not seeing a lot of short pressure on it. And this kind of feels like the bottom. A lot of people seem to want to load up. If we got any lower than 2, I think people get real hungry for it. But only 74,000 shares traded on IINN today. And, someone trying to sell down up at 231. Otherwise, I think people are kind of like jockeying their bids over each other to try to get in at good prices and build their positions here. So CRDO baselining at 11, not much volume. KSCP, not doing much either. Not a lot of action in these. Not a lot of excitement other than watching things fall. Not the most entertaining IPO to watch. Hope you guys had fun. Anyway, keep an eye on these over the next day or two. Sometimes we'll see some, if the market can turn around, I expect CRDO to get some attention. KSCP, I don't really think people like this stock. I don't think people like this company. I wouldn't be surprised if we see another knife down at some point here. Got people pretty eager to get out of their positions on any side of kind of upside, and just not a lot of excitement today. If we do see a run, it would be after this probably comes down a little bit more. So just can't justify any play in any of this stuff today. So I am going to wrap. Appreciate you guys joining me today. If you haven't already, please like, subscribe, retweet, help promote this. It can be a lot more fun when the market is a little bit stronger and we have better names to trade. But this is not that moment. We basically haven't seen any opportunities to trade these. And I will say goodbye with that and catch up with you all later. Cheers.